What's up, guys? Here's another. We're doing another recap for the day. Um, this is a recap for the trades of April 26th, 2023. I took three trades today. I took Nike, NKE. I took a put on Nike, a 123 put. I took a QQQ put off the morning, 0DT put, and then I took Tesla puts off the morning as well. So Tesla was a name that I was eyeing up. We had bad earnings. We gapped down heavily on earnings. Pretty nice volume, hence earnings. Um, and one thing that I wanted to discuss about Tesla was we printed a big earnings gap down on nice volume. We printed a inside bar on a weak bidders on an inside bar the day after, right? So I definitely was expecting some sort of continuation downwards. We did get that yesterday. This yesterday did print a breakdown out of this inside bar, but not by much at all. Um, and then we got another lower volume inside bar, right? So I was looking for a general breakdown below this inside day breakdown. When you see a low volume inside bar followed by um, a red day on higher volume, I know the spread here isn't exactly something that signifies further downside because it's somewhat neutral. But just keep in mind that we do have sort of like a range of imbalance down here. So it's definitely something to keep an eye on, right? I was seeing if we would potentially hold this level and make a nice move to the upside. But one thing that I saw right off the morning was extreme weakness. Tape was flying, but looked extremely weak. Um, so let's duplicate this and take a look in comparison to the general markets, right? So what we first of all got was we first of all got bidders trying to establish a wall off of the inside day breakdown level, right? But what happened is we did lose our pre-market support, right? Our pre-market low and our support. So that was obviously key, right? This was by far the weakest name from 9:30 a.m. at market open to 9:45, right? 9:45 we started to get that breakdown. So during the morning, I do trade on a lower time frame. Like I said, bidders were trying to establish sort of a little bit of a wall off of this range. They easily got soaked under VWAP, and then a breakdown was coming. Breakdown came on high volume, and then we got the retest multiple times here to potentially go short, risking either a 21 EMA, risking this level on a base under it. And then as you see, it just keeps getting pushed and suppressed by, soaked by sellers. Buyers get completely soaked on every attempt to, you know, buy or save Tesla. And it's not even necessarily that. It could just be buyers obviously mitigating their loss, trying to get to break even, and then, selling. Um, or shorts taking profits on the early morning small sell-off. Not sure, but generally speaking, buyers were just extremely weak at this range. So that was a perfect short opportunity. I took those, and then I was obviously targeting this range of demand from if you go to a larger time frame, you'll see this range of demand that was right here where we got above pre-market, we broke out, we retested it. Shorts covered their positions down here, it seems like, or buyers heavily stepped in, and then there was just a nasty rip. So when we did, I was expecting with the way that intraday price action was kind of going, I was expecting this to honestly, with volume ramping, probably to test down here at these ranges. Um, so yeah, that was pretty interesting. The fact that we did test the 155 psych and started showing heavy bidders, I didn't want to long it, but it was a very high volume green candle that came in right in the midst of this whole entire bloodbath. So a target of 155 psych level was honestly pretty key there. So if you go over and you check out Qs, right? I took this in Confluence, or not necessarily, but I shorted Qs directly after. So the reasoning behind this was Tech had a lot of confluence throughout the day. If we open up another tab, I could show you Tech. Um, and at the time of this trade. So what I do is I analyze Tech and I look at uh, the key holdings that will pivot the market from in a direction, right? So That would be Amazon, Microsoft, Tesla, and Apple. And then I also do watch Nvidia, AMD, and Meta. I wasn't really watching Meta for the fact that they had earnings and after hours today. Um, and I don't necessarily love gauging movements right before earnings. So, I mean, this is pretty much all I watch. Google, Meta, Nvidia, AMD, Netflix, Amazon, Tesla, Apple, Microsoft to gauge QQQ, right? So, what I saw was I saw Apple have a nice nasty sell-off right into open. A bidder did step up into this range. We started to have some resistance up here at this swing high pre-market, as well as just this general previous low a day and this previous demand that we were in. So that's first thing for Apple. So I shorted QQQ up here, right? So this looked like a lower time frame rising wedge. And the reason why I shorted this is, first of all, this was the 314 psych level. That was a major resistance into pre-market. We did see a sell-off under that, right? So our next big test into open was right here off of pre-market, which was 313.89. I really like that for the fact of there was sellers heavily sitting there. So we did have some momentum into open. We sold off, printed a nice, uh, huge bearish engulfing on a lower time frame. This dip was trying to be bought back by buyers, right? Buyers tried to buy it back. It got shorted down further on higher volume. I still didn't like the trade just for the fact of risk to reward not being great and in my favor as there is, a pre-market support down here. Pre-market's huge, right? So we continued our range to the upside, right? This general range that was continued to the upside was on generally low volume, right? It wasn't high volume. It wasn't low volume, but it wasn't extremely high volume, right? So it wasn't something that I was necessarily loving, for the long side at least. I didn't love the short at the time, but one thing that I will mention, guys, is we start to get this rejection of our 15-minute orb high up here at this 313.50 range. This was like also getting into that pre-market resistance. Our first rejection, we did technically make a higher high, but only by like about a penny, right? And then it got shorted back down. Buyers did soak this dip down here. They sent it back up. Volume wasn't anything crazy. Another higher high made, but barely by anything. Sellers pushed us down on lower volume. Buyers picked it up on higher volume. Another higher high, but barely by anything. So you can generally see how bulls are, generally speaking, they're making higher highs, but these higher highs that they are creating are very minuscule and they're almost irrelevant, right? So if I show you the price movements on each and every one of these, or the progression of each higher high, look at the minuscule amounts of these higher highs. It is 313.61 to 313.64, 313.78 to 313.83, and then at the end all the way up to 313.85, right? So we were already talking about this 314 support, or I'm sorry, resistance. It was a pivot, and that pivot was also shown by the retest of this range. This is where buyers did try to step in. They did step in pre-market. This did turn into a resistance off of this general VWAP and this bear flag from yesterday, and then we obviously had a big time continuation to the downside. So whenever you see a huge move like this, you generally want to look at that range in which bulls made progression towards and were or I'm sorry, bears, where they were heavily sitting, and you want to watch that and say, hey, like, you know, I want to see if this range is going to be respected here. I'm not necessarily going to go short off of it, but show me a sign, right? So I didn't necessarily love the short play until the spread got so diminished and so dry, and liquidity was so dried up to the point where this almost looked like bears were kind of sitting on cash just with their asks kind of sitting up here at this range. I took this trade on a lower time frame, like the 2 minute, and I took it after this huge print to the downside that sliced through all of these, generally this whole range, and it printed us the healthiest bearish spread out of the chop range on a lower time frame. We did end up getting the retest of the range, and then I was generally thinking this whole entire move to the upside was on kind of lower volume, right? So Um, the general structure was higher highs, very minuscule higher highs, and then we had a lot of technical confluence. So we were getting this retest at 1014. 1014 was here's 1015. So Apple did see some momentum to the downside at the time. Here was Microsoft. Um, Microsoft looked like it was catching a nasty sell off of VWAP here with a nice higher volume to match this one. Both neutral spreads. This one was favoring sellers a bit. So it definitely did look good. I didn't like Microsoft shorts just for the fact of it basing above this range, failing to fill the after hours earnings imbalance, and it was kind of holding structure to make higher highs after the big move up, especially after holding this 294 psych level. So that's that. Amazon, I really like this one confluence wise for the trade, just because of the fact that it had a nice momentum off of the open, right? It came down here. It obviously snatched some liquidity. Buyers were obviously very present off of this 104 range. This 104 range was definitely key as it brought us all the way back up above 105, above this, and then from there on out, it started giving us an anomaly like, hey, you know, result is getting very, very, very flat in regards to this volume coming in. Volume got really dry, but there's no progression really made. This looks like some exhaustion, and then at 10:15 we did print this. Uh, like I said, very healthy spread, a bearish candle to the downside. Um, and then we also had Tesla right here. So Tesla was also kind of just dragging the markets down. So I think Qs was lagging a little bit, and I've noticed that lately with holdings in correlation to Qs. I notice sometimes the market will prop itself up, and then it never saw really that fade from Tesla eating shit. So we did initially and finally, or we didn't initially get that, and we finally got that fade later, a little bit later, from the Tesla, and yeah, just those other couple names. I could also check out what's it called, NVIDIA. Here was 10, 15 right here. So this was the 270 range. It did sweep the liquidity off of the 930 high where there probably was shorts sitting above this 271 range. So it swept it up. It tested this range of supply, and then it came back down. It printed a very high volume shooting star candle. I was also kind of gonna go short on this one. I never did, but that definitely played out. It seems as if the risk was a little bit too far for me to short, and it seems as if there was a lot of shorts also stepping in to get that seller's ask below pre-market high, right? So that was another name that I was watching to potentially fill this fair value gap that was in this range. We did fill the fair value gap that was right here. So chips is another reason as to why I also gauge my trades with QQQ and things like that. So there's our fair value gap. You take your wick to your wick, right? Take your wick to your wick. Um, well, this was just generally a range of imbalance that we definitely needed to fill. So I knew we at least had room down to somewhere in this range for a lower high. If you really want to take, the lower high range. I was targeting somewhere around the 618. So it was just a small scalp for the 0DTE Qs puts. These did print 100% return. So pretty clean rising wedge. A little bit sketchy, but I had tight risk above this high after I saw this rejection. I saw this right here. It was a break of structure. Um, and a nice close under this rising support, and then from there on out you got the retest. This retest was on really low volume. It was a very minuscule retest right here. Really low volume, like I said, and then from there on out, boom, once I saw this candle kind of print and then a slice through VWAP, that was obviously conviction to hold. So that's Tesla, that's Qs, and then we have Nike. Nike was awesome because if I go to my um, Discord, I was already done for the day. I nailed these, and then I Alrighty, so this was the Nike setup. So it was a head and shoulders on the 5 minute, right? And then from there on out, it was a 125 rejection. It had a clean breakdown under the below the structure. It failed to pretty much hold the higher highs, and it seemed a little bit exhausted with a change of character due to obviously the head and shoulders, right? The right shoulder is a lower high below the head, and from there on out, you will see a change of character and a potential break of structure for continuation or not continuation, a reversal to the downside, right? So, um, this is where I got in. I got in at 127. If we do go head over to Nike, I will talk about this one. So I traded this one on the 5 minute, and I want to touch on the daily for Nike. Very simple chart, guys. So one thing that I really liked about this Nike daily setup was we had a general range of supply. I know it's a very wide range, right? But we did have a general range of supply, right? So we had this phase of accumulation or distribution, right? Uh, Earnings came out. Earnings were very positive. It did try to get marked up. This markup was a shakeout. It did get shorted back down on really high volume. And then they kind of just let this name kind of float back into this range where they marked it up to from earnings, despite the strength of the markets lately, with S&P reaching, 2023 highs and things like that, we did see sort of a chop range and a range in which it seemed like there was a possible, it was testing it was testing for almost a major sign of strength, like a jump over the creek, whatever you want to call it, into this range, right? And don't forget, there's also supply range from over here. So this general range on the daily, really, I it caught my eye for a short. And then we tested this today, 127, right? And this was, generally speaking, for relative to the past 10 candles, lower volume heading into this range, and then higher volume print that did reject. The reason as to why I really did like the head and shoulders intraday was also time frame alignment with the daily 9 EMA, which was hive day. Uh, if you look at this is high day right here, so this is the head right here, right? So that's the head, and then this is your left shoulder, this is your right head, this is your right shoulder, and then technically in this scenario, our neckline is diagonal, right? So I'm already bearish on Nike. So here's our change of character right here, and then here's our BOS down here. So I said like I said, I got in this at um, 127. So that was right here, right? So I got in on the break of the structure. I saw tape. Nothing really looked good. Yes, SPY wanted to fall. Um, so I just generally like this, right? This was Bidder's last chance here off this attempt of a hammer. They obviously pulled that bid, and then this obviously broke down. It did try to get a retest, right? I got in on a little bit of a very minuscule green move to the upside, like 4 cents, and then I got a nice fill at the bid. So this actually, it saw major continuation. It was an intraday head and shoulders. We got the change of character for the right shoulder. The right shoulder did respect the left. This could have been another entry up here, respecting the shoulders from left shoulder to right shoulder. We did get the breakdown below the neckline. EMA started to curl, and then from there on out, it was pretty much a target to VWAP, right? This target to VWAP printed a absolute monstrous candle right through it, right? I saw bidders also kind of pull their bid off the tape, and then another thing is I want to talk about time frame alignment with this general move up from retrace of last week's lows to last week's or this week's highs, or yeah, this week's highs, and then from there on out the move downwards. Um, I generally just wanted to see the retracement. So it was from here, from the move all the way to the top. This was the the swing. This was a 125 rejection, a psych level, as well as that move, high to low, a 0.382. The right shoulder did respect that, and then from there on out, like I said, we saw major continuation downwards. So yeah, that's why I like this one. Nothing crazy of a trade. It did go like 80, 100% though. So definitely pretty nice. Um, yeah, I mean, pretty much when I saw the head and shoulders and the change of character off of this 382, I knew that was the time for it to kind of come down. And then as well as this hourly print. So this hourly did print this printed sort of an hourly shooting star on really low volume. This printed one sort of right after. And then that was pretty much that right shoulder range, right? And then higher time frame alignment, like I said, you could also call this sort of a rising wedge on a higher time frame. And how we did, break down, we did get a retest, and that retest was kind of a weird rising wedge pattern, like this. But, generally speaking, a very low and weak volume move up. Got the print at the top, sign of exhaustion, got the retest, and boom. So pretty nice trades there. After that, I kind of got off. I didn't even really look for anything much of anything else. One thing that I did notice is we kind of got a sweep of liquidity. We filled the fair value gap that we did get the sweep of liquidity from the nasty move down. This did fill it based on for the higher low attempt. We did reclaim that range, and then from there on out, we saw a nice move up. A mark up filling this imbalance. We tested this supply. We broke through it. We did get the retest. That retest was successful of this range of supply up here. This was generally speaking where all the supply really was right here. We did get the nice retest into that range, and then further continuation up until about pre-market high. Pre-market high was then tested around this range of general pre-market supply from right here. That rejected. We did try to hold for a lower high. We never got that. We did get a break of structure actually right here. We didn't get the retrace into it off of low to high, a nice 382 short, and then from there on out, we failed to fill the fair value gap. This is the break of structure. This is the retest. High volume into the retest, but it did fail. They tried to, this sliced right through VWAP. They tried to hammer candle it again off of this flat top, or this flat bottom resistance. They didn't successfully do that. It based on their VWAP, and then from there on out, we're probably going to fill this imbalance all the way back down. And one thing that I've talked about, guys, a lot with the people I trade with is these don't generally see a lot of the markets don't generally see a lot of trend days, right? And it's a lot of times where bulls make progress and then bears take it all the way down, and then bears make progress, bulls take it all the way up. So they definitely go together, right? And then Eli, what was that B pattern on the volume profile from yesterday's price action as well?
For Apple?
Yeah.
Yeah. You want me to show it? Or you're not able to do that?
I think I can. Can you screen share?
Yeah. Shit, I gotta switch the app. On. All right. Yeah, let's see here. Okay, yeah, this is what I was talking about here. A significant volume profile print. We have B pattern, P patterns are what you want to pay attention to. Everything else, honestly, they're lower probability. Wouldn't even want to pay attention to them. What I saw intraday was a significant volume point of control where we rejected under multiple times. We finally see that breakthrough and retest, and we have this low volume notch from yesterday, which is just asking to be filled. Liquidity is grabbed all the way up. Um, it's an imbalance. Of course, you want to have that filled. Here's our high volume note.
Yeah.
And that's exactly where we reject from today from Apple.
Yeah. And then, yeah, that's important to touch on, guys. And I wanted to make this recap video a little bit longer, is because we have this range on Apple that we, like you said, a B pattern from over here, where most of the liquidity was down here at these ranges, right? So whenever we do start to kind of break this flat top resistance as well as this pre-market swing high, and it seems as if the effort gets extremely low by bears here off of this candle, and then it's kind of a not it's the print of this candle is not it's not respected at all, and then we get the close above on increasing volume, and then a huge push to the upside, and that's obviously signified by uh, supply of these ranges up here being absorbed, right? Supply is generally speaking just all right in this range, right? This is the flat top resistance. Anytime you see a really big flat top resistance and the sell-off's getting weaker and weaker and weaker, or a push down like this, it's generally just a buyer campaign to grab liquidity, send it up off of these lows where bidders were sitting, and make more of a violent move to the upside because a nice move down, they want to grab liquidity off of this low where bidders were previously having a high volume print through it, and then they grab these orders down here, and then they send it right back up. This is sometimes where indicators don't matter and price is first. We can buck up. We retest this flat top resistance up here. This is where sellers were. Um, and then they absolutely just rip through this range because of the absorption, right? Obviously, if this candle wasn't respected, then all of these supplies absorbed. If we get a nice print right through this, generally, like all the supply is pretty much absorbed. If you go to a lower time frame, I'm sure you can see this, how low it is, right? And then we get a final retest. This retest is extremely low. This is really low volume right here as well. So sometimes you have to dissect price action through your chart on a lower time frame, or just look at tape, whatever works for you, whatever floats your boat. And then from there on out, yes, like Eli said, we had a general imbalance where sellers were from today, right? And then, like he said, we test the next range of supply, which supply does match up with those volume nodes. It showed a higher volume node up here at this range where this actual supply was. I also talked about that's why this pivot's marked here. And that's another reason as to why I had that QQQ level marked out up there, right? So that's your general range of supply. You can see how this wick kind of retested into that and then saw a nasty sell-off. So that's your general range of supply right there. That was where bidders did try to, seek continuation. Never did. This is where sellers did start to absorb the buyers. They did get one more test for, filling this imbalance and then grabbing some liquidity to head lower, right? And that is exactly where we rejected today. Well, not quite literally, but in that general range, because that is generally all supply up there. So, um, and then you can even honestly just take this wick. It's never going to be perfect, guys. One thing you got to really realize, and a key to trading is just managing your risk management at these ranges because you know a supply is approaching, right? So, I like to go back. I like to look at, you know, tape first of all. Um, and then I just react, right? If I'm holding my call runners and I run into a candle that prints that looks like this much high volume and then a low effort by bears right after as we step into this higher volume node from yesterday's uh uh what's the word? Volume node, like higher volume node up here from yesterday, then I'm looking for this to potentially break structure, get a retest, and then from there on out go, right? So yeah, I mean that's pretty much it. Um,
I got one thing to add too.
yeah, what's up?
Can they see my screen?
Yeah.
So, what Joe was saying with the levels of drawing your supply and stuff. I mean, typically, I mean, we notice this is a supply. You might want to draw it like this. We don't quite get to that level. You could use your volume profile as a way to look at price in a different way. Like here's our high volume node. This is where the majority of the action takes place.
Yeah,
You wouldn't want to bring up your supply to here just because this is where most orders were going back and forth. So
yeah,
just
and they
another way to look
obviously,
at it.
yep, and they obviously would want to. They're ready to defend that. And another thing was, like we said, at this range right here, if you're a fully technical guy and you don't want to look at volume nodes, you could technically take your supply range from the point in which we do get the retest after the break of structure, which was right here, and then from there on out, just an absolute melt to the downside. So this general 3 bar pattern up here is where your supply is going to be sitting as it matches up with Eli's volume nodes. So those were the only trades for today. Um, and then we also did recap some of more or less the movements of the day. Meta did report tonight. They're up 13% in after hours. We'll see how that opens up tomorrow. There is GDP tomorrow, so keep that in mind as well. So I'll talk to you boys tomorrow.